I'm Ashton Addison from EventChain for Investment Pitch Media and the Crypto Coin Show. And today on Blockchain Interviews, we have Sidney Powell, the CEO and co-founder of Maple Finance. Sidney, welcome to the show, and thank you for taking the time to be here today.
Hey, Ashton. Thanks for having me on. Really happy to be here.
Yeah, I'm excited for our discussion. Really interesting DeFi play with institutional borrowers that I'm excited to dive into. And I would love for you to kick it off for the viewers by just giving a high-level overview of Maple Finance and some of the solutions you're providing into the space.
Yeah, terrific. So to give a bit of background, I came from traditional finance background and used to work in debt markets. So what we've done with Maple is we've built a decentralized marketplace for institutional growth capital. So our vision is to help the leading crypto native companies and institutions to grow their businesses by accessing under-collateralized loans from the DeFi ecosystem. And then on the other side of that marketplace, we provide an opportunity for anyone in the DeFi ecosystem to earn a yield, sustainable yield, from partnering with these companies and helping to fuel their growth.
Mm-hmm. Definitely, and thank you for that intro. And I'm curious, diving into these problems a little bit more that you're trying to solve, with debt marketplaces and decentralized finance, is there something wrong with the core systems that you're looking to reinvent? Or is it more just there's not enough access for institutional investors and you're trying to open those doors?
It's a bit of both, I would say. So I think what we've found is that you now have the first companies who are crypto native, who have found product market fit. They're very profitable, strong balance sheets, good growth runways, and yet they're unable to access the capital from traditional finance that they need to reach their growth potential. Mm-hmm. So our thesis is over the next few years, they're going to expand to be many times the size they are now. We've found particular traction among market makers, market neutral funds, among others, and also exchanges. So I think the problem that we solve is that they're not able to currently access debt capital or borrowing so that they can reinvest in the growth of their businesses. And then as we look beyond that to non-crypto companies, which is where we ultimately want to expand to, capital markets are just hugely inefficient. They're very globally fragmented, and there's a lot of fees and third parties, and a lack of integration across the globe of those markets.
Definitely, and DeFi hopefully is making that a little bit more efficient and definitely global. And researching into the protocol, you have three different players primarily: the borrowers, pools, and delegates. Can you just talk about the protocol of those three parties, how it interacts with each other, and how it does make an efficient capital system within Maple Finance?
Yeah, sure. So we start with the primitive of a liquidity pool, and that's where these liquidity providers come in, who are effectively lenders on our protocol. So they would deposit stable coins, and then institutional borrowers are able to take out loans from those pools of capital. So it's really a peer-to-pool type model of lending. But what's interesting and unique about Maple is that each of those pools has this role, as you said, a pool delegate who kind of manages the pool, and they would be a fund or industry professional. And what they do is they perform the assessment of the borrower's creditworthiness and then approve the terms of the loan. Mm-hmm. So really what that delivers for the borrower is kind of the best of an OTC style relationship. They're able to be confidentially assessed, and they're able to get feedback on their loan terms. Mm-hmm. So those are three of the main participants. And then I'd be remiss if I didn't also mention that there is the Maple token, which we use to allocate risk and align incentives across the platform. The way that works is that participants can stake the Maple token to a liquidity pool, and that provides a kind of reserve which offers protection if there are defaults within that pool. Mm-hmm. In exchange, it of course earns a more leverage yield.
Mm-hmm. That's great to know. And I was going to ask about that for the parties that are lending. I'm guessing there's incentives to have a greater yield with Maple, but there's also other kinds of assets. You mentioned stable coins. Is there a variety of assets? And can you just talk a little bit about the difference for people that are sort of newer to DeFi? And is there any difference between lending using Maple Finance and lending in any other decentralized exchange like Uniswap or any other liquidity protocols?
Yeah, absolutely, and that's a really good question, Ashton. So, for a liquidity provider, a lender on Maple, what they benefit from is diversification because they're lending into a pool of loans, and then they benefit from not having to do the credit assessment themselves because we recognize that's a skill set and a time commitment, and then they also benefit from having that protection or cover offered by the staked Maple token. So that means that if there are a small number of defaults within the pool, they're still protected. Mm-hmm. This then speaks to the difference between Maple and some of the other lending protocols, which is that we are fundamentally under collateralized. So we're looking to provide a product which allows crypto native businesses to expand and grow their operations, whereas other protocols tend to be more over collateralized, and that lends itself more to speculation because you're putting down $150 to borrow $100. There's no actual credit creation on those protocols.
Mm-hmm. Definitely. And you mentioned for the creditworthiness and for approval of borrowing from institutions, there's the delegates. And you mentioned that there's funds or some kind of accreditation for those delegates, but I also was reading that there's decentralized asset management, and it seems like to have delegates, there's some level of centralization. Can you just talk about the balance between having a decentralized protocol and having the delegates and how that's managed, so to sort of balance those two out?
Yeah, and that's a very good question and one that we do get asked about. So the delegate is a trusted position on the platform. But the way that we balance that with decentralization is that in a mature state, there should be many delegates. And you could think of each of them almost as if they're operating a node on the platform. So each delegate would be running their own pool, and each pool could pursue a different lending strategy. Say one could focus on a specific industry like market makers or a specific region like North America or Southeast Asia. But we'll have a diverse range of these and many delegates on the protocol. And then each delegate is in charge of approving the loans that their pool funds. So you can see that in that way, we start to have a measure of decentralization because no one delegate plays a critical role on the platform. And then the accreditation of the delegates, or the whitelisting, I should say, can then be controlled by Maple governance token holders. Mm-hmm. So in that way, as a protocol, we start to achieve broad scale decentralization.
Definitely, and that's good to know. And I was going to ask you about the Maple token because you have mentioned it a couple times. You mentioned governance in being able to choose the delegates. That seems like an important aspect. And for liquidity providing, for extra yield, is there also other requirements for institutional borrowers to utilize the Maple token, or are there any other functionalities that the Maple token is used within the platform, and does it create a sustainable ecosystem for Maple Finance?
Yeah, another really good question. So I would say the way that we've set up the protocol, we tried not to have the token limit growth, and so you can participate as a borrower, where you just come on, you create your profile, and then you're able to request a loan from the pool delegates on the protocol without needing the Maple token at all. And that enables you to come on and borrow in stablecoins or in future other currencies. And similarly, to be a liquidity provider, i.e. a lender on the protocol, you also don't need the Maple token. And what we like about that is it means that you can just come on and earn a yield on your stablecoins, which is highly desirable for a lot of people in the space at the moment. Where the Maple token comes in is that if you wish to stake and earn a higher yield, you would put down 50% Maple token. So let's say $100,000 of Maple token and $100,000 of USDC. And what you're doing is you're putting that into the reserve, which offers protection to the liquidity providers. And in exchange, you would earn about 10% of the interest yield that comes through that pool. So that should translate to a sort of like a high teens yield. And that's how you can use the Maple token to participate and earn a yield. the other way, aside from governance, is that a portion of fees get accrued to the Maple DAO's treasury, and then Maple token holders can vote on what to do with that, whether it be to fund development or distribution.
Well, that's really interesting with the DAO treasury. And you mentioned you don't need Maple token to get a yield. Can you just talk a little bit about the yield? How is that calculated, and does it vary? And what is the bonus like when you're using Maple token versus not?
Yeah, really good question. So the way that you earn a yield on the platform as a liquidity provider is that you deposit USDC in our first pool. You're locking it up for about 6 months, and that's because this is going to fund term loans. Now, in our first pool, we've got some of the top tier borrowers who are market makers and market neutral funds. So in the first pool, we have Alameda, Amber Group, Wintermute participating. The average yield on the loans in this first pool has been around 12%. So then as a holder of as a liquidity provider, net of fees, you're able to earn about a 10% yield in USDC. And the intent is that these pools are ongoing. So you just put your USDC in and you earn an ongoing yield over time as loans mature and finish and new loans are created. And then the pool can grow over time as more people deposit to it. The benefit of holding the Maple token, and you will earn the Maple token if you lend into the pool as rewards, is that you can then stake that and would earn a higher yield that's probably closer to like 15 to 20% in USDC. And that's because you're taking a good chunk of the interest that comes through that pool. So you take 1/10 of the interest, and that comes through to you as a staker of the Maple token. So you could effectively be both a liquidity provider and a staker.
Definitely. Thank you for that information, Sidney. And also great to hear that you have some great partners like Alameda already in that first round there. And I would love to get a snapshot for the viewers of, you mentioned the first round. Where exactly is the platform at in terms of the next steps? And it's fully functional with this first round. And then, what are the next steps for the summer of 2021 and for the end of this year?
Yeah, great question. So yes, as of last week, we're fully functional, up and running on mainnet. So we did our first pool of 17 million in loans. We closed that the previous Tuesday on the 25th. And what we did is we took a guarded launch approach. So we said, let's just do a few smaller loans to great partners we're comfortable with. We opened that up and we took some institutional commitments of liquidity and then liquidity from the broader DeFi ecosystem. We thought it might take a few days for that liquidity to fill up. That was about 3.5 million, but it went in under an hour on the 21st. And so where we're at the moment is we're now just preparing the second tranche of loans, which will be another 20 million because we've had a lot of interest in that. And so that will again be market makers and market neutral funds who are of exceptional credit quality. And then a couple of weeks after that, we'll be opening up our second pool with our second pool delegate, who will be really excited to announce over the course of this month. But that will take us on a path to around 50 million, 45, 50 million in loans originated. And then for the rest of this year, we'll be targeting getting into the hundreds of millions of loans. Definitely setting an ambitious target for the team to hit.
Very ambitious and great to see that growth, and I'm looking forward to following along while that does happen. And now, on the flip side, do you foresee some challenges in the longer term? What kind of challenges you may have to overcome to become, the name for institutional debt marketplaces in DeFi as maybe 5 years down the road?
Yeah, that's another good question. So I would say we have no challenge finding borrowers and finding creditworthy borrowers. We continue to receive inbound interest every week with very little marketing effort so far. Borrowers won't be the challenge. We think there's tremendous growth in the crypto native ecosystem, and we're really looking forward to to helping those companies reach their growth potential. Our main challenge will be sourcing the liquidity to meet that borrowing appetite. And so what we're focused on over the next 12 months is, can we start to establish partnerships which maybe bridge into TradFi to get people who are willing to commit 10, 50, $100 million at a time to the protocol. So I think that will be our main challenge, just in meeting the level of demand we have. And the other one is that 5 years down the track, costs of capital are obviously wildly divergent between traditional finance and what you see in the crypto space, which is generally higher. Now, my thesis is that as liquidity improves, we will start to see a compression of that cost of capital in the crypto space. And that therefore makes a protocol like Maple far more appealing as a capital market solution to these larger companies. Because ultimately, 5 years down the track, I would like companies worth hundreds of billions of dollars to be issuing billion-dollar loans. Now, they will, by and large, probably be reluctant to do that if they have to pay a mid-teens cost of capital. So I think it's getting liquidity into the space so that we can achieve broader access.
Definitely, well said. And if there are any people that are interested in liquidity providing, staking, institutional borrowers that are watching, what's the best way for them to get involved with Maple Finance and learn more?
Terrific. So they can follow us on Twitter at Maple Finance. They can also email me, so Sidney, my name, at maple.finance for an expression of interest. And then we're also pretty active and responsive on both Telegram and Discord. But I would say either reach out and DM us through Twitter or email me directly. We are receiving tremendous interest at the moment from the first sort of hedge funds and institutions that are considering this. Once the first ones come in and earn a yield and earn the higher yield from DeFi, I think most of these will never look back. It's just an education piece for now. We're also receiving a lot of interest from family offices, which tend to have a more flexible mandate.
Definitely. Great to know. Thank you for those links. I will leave that in the description box below as well. All the best with the growth of Maple Finance. I will be watching, and let's follow up in the near future.
Thanks very much. Really enjoyed it, Ashton.